Welcome, Grade 12s. Yes, you are with Ashraf Patel. And remember the crew, James and Abi. Today we're in a space shuttle. We're heading for the moon. Okay, guys? And we're going to use the journey of inventory valuations. And here goes. We start off with an appetizer. You know when you start off your flight, they give you something light to start off with? Here goes. I want you to use the next minute to look at these statements that are given to you, and from these statements you are then expected to determine which one would best fit the description that is given to you in the block, right? So for the starter, you have 1 minute to complete your starter. Go for it. Welcome back, Grade 12s. Let's start with the first one. It says, this method assumes that stock is sold in order of the date purchased. Now, obviously, you know that this results in us having to determine now which one of these would best suit this description. And the fact that it's sold in order of date purchased tells you that this is Fifo. And you know that stands for first in, first out. Obviously, the stock that comes in first is the stock that is first sold. Keep that in mind. Right. This system ensures that cost of sales is calculated at the point of sale. Now remember, they are referring to a stock system. And there are only two stock systems that we use, right? Namely, periodic and perpetual. The fact that cost of sales is calculated means they are referring here to the perpetual inventory system. Why? Because at every point where a sale takes place, the cost of sales is also recorded. Okay. This method of stock valuation assigns a unique or individual value to each stock item. Okay, clearly they're talking now about a valuation system. And obviously, when they're telling you each item has its own value, it tells you that this is the specific identification method. What do we know about that? That the value of each item, it has a specific value. For example, if you have motor vehicle A, B, and C, A would have its own value, B would have its own value, and C would be assigned its own value. Then they say this stock system is more suited for low value goods that are purchased in bulk. Again, stock system, they are referring you to the periodic inventory system. Right. However, if they said this method of stock valuation is best suited to low value goods that are purchased in bulk, you could assign that to weighted average, depending on the question. This one said the stock system, and definitely it has to be the periodic inventory system. Great start. Great starter. Hope you enjoyed it. Let's get into the main meal. Okay, here goes. We are given information relating to Lynn stores. The business sells one type of leather shoes. The financial year ends on the 29th of February 2016. The business uses the weighted average method for stock valuation and the periodic stock system. Clearly you can see the differentiation between the stock validation or the stock valuation, which is weighted average, and the stock system which we are using is periodic. Okay, so keep that as your focus so you know where you're heading. Right, we are expected to calculate the following: the value of your closing stock using the weighted average method. Okay, let's go right into it and see what information we have. Right, there's the information. We've got our stock at the beginning of the year, we've got our purchases for the year, we've got our returns, and whatever other information that we need. So, we're going to calculate the value of your stock using the weighted average method. Right, step number one. We start off by taking the opening stock, and the value of your opening stock would be 320,770. So fine, we've got the 320,770, right, as our opening stock, plus we add all our purchases. Remember, weighted average, you add all your purchases, right? My purchases figure would be, they're telling you the total including carriage, 1392380. So 1392380, right? So you've got your opening stock, you've added your purchases to it. Next item that you need is, what other information do you have? They're telling you 30 pairs of shoes from the purchase on the 1st of February 2016 were not of a high quality. These were returned to the supplier. The business account was credited with 22,650, including the carriage and purchases. So 22,650, immediately I tell myself, that is my return, and therefore, if that is my return, minus 22,650. Can you see what I've done? I'm taking my opening stock, just to give you an indication. There's my opening stock, plus my purchases, minus my returns. So I'm now taking all my stock into consideration. Right, what do I divide it by? What's the total? So that's your values of your stock. Now you need quantities. Let's find our quantities. Beginning of the year, you had 520 pairs of shoes. So immediately you tell yourself, fine, the opening stock was 520 pairs of shoes, plus add your purchases. How many pairs of shoes were your total purchases? The total pairs of shoes was 1,960. Immediately you tell yourself, fine, I've got that, 1,960 minus what did I return? Definitely there was a return of goods, and the return amounted to 30 pairs of shoes. Clearly, that needs to be taken into consideration, and there you got your 30 pairs of shoes. Right, let's get our calculators. And let's take our calculator and calculate what we're working with here. And here goes, let's put our calculator this side. So we got our figures here. Right, here goes. 320,770 plus 380 minus 22,650, and that gives me an amount of 437,358. 437,358. Okay, that is calculated. So now I say fine. If we got that calculation, back to my calculator, it's 520 plus 1,960 minus 30, and that will be equal to 2,450. That's, remember, the pairs of shoes. I now do my calculation where I take 437,358 divided by the number of pairs of shoes, which is 2,450, and this gives you a value of 178,51. Okay, I want you now for the next minute to determine what will be the value of my stock using the weighted average method. Continue from this calculation. You have 1 minute. Go for it. Okay, welcome back, grade 12s. Let's just check our calculation again. Let's check if we've done our adding correctly, because definitely this figure definitely doesn't look right to me because it's too small. If that figure is 1,392,380, it's impossible for it to be that figure. Let's check it out. I'm sure you got a different answer. Let's just check it out. So it's 320,770 plus 1,392,380, right? Minus 22,650, and there goes. Can you see? Definitely that calculation is wrong. It should be 1,690,500. Okay, divide that by the 2450 and divided by 2450, and your answer is 690. That's more like it. Okay? So we've got a figure of 690 as the weighted average. Now remember this. This is the weighted average of all the goods that you have purchased. Right. And what do we know? How many items of stock do we have left over? We have a total of 325 pairs. Therefore, we multiply that by 325, and we now have our value of our stock using the weighted average. Let's get the weighted average there. So we got 690 times 325, which will be equal to 224,250. Okay. What lesson do we learn from this here? Obviously, you can see this, guys, and maybe it was good that we made the error, that a number like 437,358, clearly, in your calculation above, you can already see there's a 1,392,380. So this shows you that be careful when you are doing your calculations. That would immediately indicate to you that that figure, we had done something wrong on the calculator. Very important. Another tip for exams, make sure you can see that obviously a figure as large as 1,392,380, it should be close by there somewhere, and that you can see where we got our figure from. Okay, let's go on. The next thing that we needed to calculate was the cost of sales. Now, obviously, this is very, very important. We are using the periodic inventory system. So we start off by taking the opening stock. The first item that we have is our opening stock. Remember, this figure is given to us. There is my opening stock figure. And clearly you can see my opening stock figure. 320,770, and in your calculation, there's my opening stock of 320,770. Right, what do we add to it? To it, we add our purchases for the year. Right, and again, let's see if we can identify our purchases figure. Remember, we bought goods to the value of 1,392,380. Okay, so when it comes to that one, 1,347,500, what happened? The question that you need to ask yourself is that there was a return of goods. Now watch this here. That figure of 1,392,380 included my carriage. Important, it included my carriage. Can you see there? Including carriage. The purchases figure was 1,347,500. Therefore, in your calculation, you're going to put the purchases figure as 1,347,500. Reason, you're going to bring in the carriage on purchases, as you can see, as an independent figure of the return was 22,650, but your carriage on purchases was 44,880. Now, when you come back after the break, we're going to show you how we calculated the carriage on purchases of 44,880. I'm sure you want to know, so the place to be is with us, guys. Take a quick break and we'll see you in a minute. Welcome back, grade 12s. Yes, we were discussing, remember prior to the break, we said we're going to show you where this figure of 44,880 comes from. Let's look at the information. Is it given to us? Certainly not. The carriage and purchases is not given to us. What we do know is that we had 460 pairs at 18 Rand. So what we're going to do here is we're going to, I'm just looking for some space where we can work. All right, maybe we can work here, it's fine. Okay, dokes, here goes. 460 pairs times 18 Rand per pair, and that gave you a figure of 8280. So we got 8280. Right, then we got 700 pairs at 18 Rand. So you take your 700 times your 18, and that will give you a figure of 12,600 plus 12,600, okay? Then you've got your 500 pairs at 30, and that gives you a figure of 15,000. You've got your 300 pairs times 30, and that gave you a figure of 9,000 Rand. Okay, now let's add all of that together. We've got the 8280 plus 12,600 plus your 15,000 plus your 9,000, and that gives you a figure of 44,880. Okay? 44,880. There goes, 44,880. Now clearly you can see that you needed to calculate your carriage and purchases. Okay, now this is what we do. We now add all of that. So you've got your opening stock plus your purchases minus your returns. Remember that? You go to subtract your returns, add your carriage and purchases, and this gives you your merchandise available for resale. Now you subtract your closing stock, 224,250 from where? Remember the calculation that you did? You calculated 224,250. Remember this calculation here? Therefore, this calculation here of 224,250 is what you're going to use in your calculation when you are slotting in your closing stock. Right, then obviously this would then give you your cost of sales. So this table that we use to calculate our cost of sales is of utmost importance. Step number one, opening stock, add your purchases. Why are we doing this? Because we are using the periodic inventory. Do you recall? We're using the periodic inventory method of stock. And when we are using the periodic system, we have to calculate our cost of sales, starting with the opening stock, plus your purchases, less your returns, add other expenses on purchases. In this case, there's only carriage. You may have had import duties or customs duties. Add it all together, subtract your closing stock, and that gives you your cost of sales. Got it? Brilliant. Let's move on. Okay, now we have to calculate, it says here, calculate the average stock holding period in days on the 29th of February 2016. Okay, there's your information, guys. Once again, there's your information, and you now have 1 minute to complete this calculation. Remember the calculation? You're calculating your average stock holding period. That's the one you're calculating. Average stock holding period. They want the answer in days, and there's your information. Let's put all the information for you there so you can see it. Go for it. 1 minute starts now. Welcome back, grade 12s. Yes, the financial indicator that you are asked to calculate is your average stock holding period in days. Let's see if you got it right. Remember, the moment it says average, you take half of what? Of your opening stock, and you know that your opening stock was 320,770. So therefore, 320,770, and you add your closing stock. Do you remember what your closing stock was? Yes, you had calculated your closing stocks. Can you recall? Your closing stock was 224,250, 224,250, right? And that is over your cost of sales. Remember, over your cost of sales. You're calculating your average stock holding period in days. Remember, it's times 365 over 1 because they want your answer in days. Okay, so my cost of sales was also calculated. And I'm sure you have this question at the back of your minds, but I'm going to answer it for you now. 1466250. So we say 1466250, 1466250. The question that you may have, and I'm sure you have this question at the back of your mind, is that if this figure perchance was incorrect, the closing stock one, would you still be benefited by the mark? Certainly you would. Why? Because you're carrying that, it's a principal mark. It's a calculation that you had done prior to this 1 year, and whatever answer you got there, if you use that in this calculation, you would get the mark. And the same applies to this cost of sales that you have here. Okay, if we do this calculation, we're going to get an answer. Let's do our calculation. So we take the 320 770 plus the 224,250 is equal to that, divided by 2, we want half of it, remember, and that is equal to 272,510, 272,510 times 365 divided by 1466250, and that gives us an answer of 67,8, so 67 or 68 days. That's the answer that you have in terms of your stock holding period, the average stock holding period. Okay guys, so important, you got to know your financial indicator and you got to know how to do the application and how to do the question. Okay, next question says, calculate the value of your closing stock using the FIFO method. Aha! Do you remember the secret for FIFO? I'm not going to tell you because I'm going to give you 1 minute to calculate it for me. Go for it. Welcome back, grade 12s. Yes, what's the secret for FIFO? If you remember from our previous lessons, we discussed the stock valuation or validation method in detail. Yes, the secret is bottom up, not bottoms up, eh? Bottom up. Okay, watch. What do we mean by that? FIFO tells you first in, first out. In other words, the stock that you are left with is the stock that you have at the end of the year. Okay, so we want to calculate the value of 325 items. Clear? And we know that we're going to start with the 300 items that we have at the end of the year. However, we are starting bottom up. We're starting at the bottom of the table and we're working ourselves up. Okay, now, if you have 300 items, pairs of shoes, you are also told that 30 pairs of shoes from the purchase on the 1st of February, which is definitely this one here, were returned. And if they were returned, you do not have 300 of them left over anymore. You only have 275 units of those left over. Make sense? Okay, fine. So if you have 275 of those units, you say 275 of those units, right, multiplied by, what was the value of those units? Let's go back and find the value of those units. The value of those units would be the cost price per pair of 725 plus the carriage of 30 Rand, which would give you a value of 755 Rand. What am I talking about? It's the 725 plus the carriage of 30 to give you your, the 725 plus the 30 to give you a value of 755. Okay, so now you tell yourself, fine, if that is your 755 times 755 Rand, once again, I'm explaining to you where the 755 comes from. It comes from your cost price of 725 plus the carriage of 30 Rand. Okay, so that would then cater for 275 times 755. Let's do that calculation. So we've got 275 pairs of shoes times the value 755 to give me a value of 207,625. Right. However, we have to cater for a total of 325 pairs of shoes. We've worked for 275 already. So now that we're done and dusted with this one here, bottom up, we go back to the next item. Right. Now, how many of those units do we have left over? Very simple. We have a total of 325 that we have to calculate for, minus the 275 that we've accounted for already, and now we work with a value of 50 units. Right, let's take the 50 units and we say, right, fine, we've got 50 of these units left over. Once again, the cost price is 710 Rand, and the carriage is 30 Rand, so add the two, 710 plus 30 will give you 740 Rand. So we say, fine, we said we're catering now, or we're working for the next 50 pairs of shoes at 740 Rand per pair, and let's do the calculation. So we've got 50 pairs valued at 740 Rand to give me a total value of 37,000. Okay, add that to my 207,625, and we left with a value of 207,625 plus 37,000 to give me a value of 244,625. Right, what have you done? You have now calculated the value of the stock using the FIFO method. First in, first out. What's the secret for FIFO, guys? Bottom up. Start at the bottom of the table and work yourself up until you arrive at the total, which is 325 pairs of shoes that were left over. Got it? Great stuff. Well, another break, but don't stray or go away, because we'll see you in a jiffy. Welcome back, grade 12s. Just before we continue with the next question, a slight adjustment and amendment on this question here that we were busy with, just to amend the question to ensure that we have the correct figure here. We want to change for that, just for that particular question, that we returned not 30 pairs of shoes, but 25 pairs of shoes. I'll tell you the reason why. If you look at that there, you will then see that our calculation then would then be correct. Why? Because 300 minus that 25 will give you 275. So just keep that in mind, that I'm amending the question so that this calculation of ours would then be correct. Obviously, if you use the 230, the 30 return, then instead of the 275, you would use 270, and you would do the exact calculation times 755, and you would use the 50 times the 740, and obviously you'd get a slightly different answer here. So this one was done on the basis of 25 pairs being returned, so let's put it there for you. And this one is done where 30 pairs of shoes have been returned. So obviously you can see two slightly different calculations, but the principal matter is what we're working with here is that you work with bottom up when you are using the FIFO method to value your stocks. Okay, let's move on. The next question says, we have to identify one problem in shop number 1 and one problem in shop number 2, and we have to quote figures. In each case, give 1 point of advice. Right, so if we look at that question here, there's the information that you have regarding your shops. You have I'm going to give you 2 minutes, 1 minute for shop number 1 to identify the problems, and 1 minute for shop number 2 to identify your problems. So again, this is problem solving. Look at the question and see what are the possible problems that these shops have. Remember, the question says identify one problem in shop number 1 and one problem in shop number 2, quote figures. And in each case, give 1 point of advice. Right, so there you have your scenario in front of you, and you have 2 minutes to check out what was the problem and how can you solve the problem. What advice would you give? Go for it, guys. Your 2 minutes start now. Welcome back, grade 12s. Okay, let's see whether you've identified the problems and what type of advice have you given to Andy and Bob. Well, here goes. Let's look at shop number 1 first. Your stock holding period of 180 days is definitely unacceptable. Why? Because you are investing too much of money in stock. That means you're keeping stock for 180 days. That's a long time, right? And obviously, by holding that stock, you've got money or cash that is tied up in that stock. What advice would you provide? Purchase stock in smaller quantities. As and when you need it, you purchase it. In that way, you're not tying up your money in your stock. Then, the markup of 90% leads to low sales of 350,000. Watch here. What we are saying. By using a markup of 90%, you are reducing your sales figure because obviously it's a higher markup. And when you have a higher markup, it reduces your sales. Therefore, you are telling the owner or the manager that what you have to do here is decrease the percentage markup on sales, because by decreasing the markup, you have the potential of increasing your sales, right? That was shop number 1. What about shop number 2? Clearly you can see your returns are high, 15% of your sales. Let's identify it. Watch. 36,000 Rand worth of stock is being returned out of a possible sales figure of 240,000. This means, therefore, that that figure is definitely too high. What advice would you give? Sell the correct goods, the quality to customers to avoid returns. Review the returns policy. Maybe your customers are just taking things for granted and they're just buying stock and bringing it back. So have a look at the overall policy to see whether it can be reviewed, and maybe the problem may be with you, with the fact that the quality of goods that you are supplying are of inferior quality, or whatever the problem may be. So check that out, work on the quality of your goods, and also check your returns policy. Right, what about advertising? Your advertising is only 4,800 Rand. Again, when the question says quote figures, that figure is given to you. Watch, your advertising is 4,800. What proportion is it of sales? Here the calculation is done for you. You can see it is only 2% of your sales. Definitely increase your advertising to increase sales. Remember the story about advertising? If you don't advertise, it's like winking at a girl in the dark. You know what you want, she definitely doesn't know what you want. So you have to advertise effectively. Right. Another challenge that you have, another problem that you have, this business is only open for 5 days. Let's look at it. There you can see it. They're only open for 5 days. The other shops are open for 6 and 7 days. Right, what else do we know? There's a low markup of 50%. Obviously, we could open another day so that we can open for an extra day. Increase the markup percentage to increase your sales. Definitely. Obviously, you got to strike the correct balance. You can't go right up to 90 and 50 maybe too low. So look for a balance. Maybe you could go up to 60%, and maybe that would then suit your business, right? And you only have 2 shop assistants relative to the others. Let's see, what does it look like? Here goes. This shop A has 4 assistants. Shop 3 has 6 assistants. So Andy has 4 assistants, Chad has 6 assistants, and you are sitting with 2 assistants. Clearly, that could also be a challenge, and the challenge is that you only have 2 shop assistants. Employ more shop assistants. So when you're looking at a question of this nature, you've got to look at the possible reasons and also the advice. Okay, guys, now you are told that the shop number 3 had 2 good decisions that Chad had made in respect of shop number 3. You got 1 minute to see what were those good decisions that were made by whom? By Chad. So your emphasis now is on shop number 3. Check it out and see what good decisions were made by Chad. Your minute starts now. Okay, grade 12s, 2 good decisions that were made by Chad. Let's see if you've identified them correctly. Here goes. One, a good quality of goods or good customer services resulted in fewer goods being returned. Only 2% of your sales. So we're saying that of the total sales, 19,000 Rand was returned. Let's identify it. Clearly you can see total sales of 950,000, the returns were only 19,000. So only 2%. So you're selling good quality goods and good customer services. You're working 7 days a week. That's right. Watch this year. Compared to the others, you're working 7 days a week. Obviously, you're providing quality service in terms of service delivery to your customers, right? And obviously, this would result in higher sales. You've advertised more, 47,500. And yes, clearly evident. Look at the advertising. And clearly you can see it's 5% of sales. So definitely you are winking when there's bright lights around. So the girl knows exactly what you want, and definitely she can reciprocate. Okay, on the lighter side, right? Your rent expense is 96,000, indicating that the shop is in a good area, resulting in higher sales. Yes, the positioning of your business, clearly probably in a high traffic area where the feet are coming in, and obviously that results in higher sales. And then you're selling at the right price. You're using a markup of 60%, which led to the high sales of 950,000. Let's identify that. There goes. 60% obviously seems to be the right percentage to use. Why? It's resulting in sales of 950,000. Well, grade 12s, the end of our journey to the moon. Guys, what is important is when you get a question of this nature, to look at the possibilities, study it, identify certain trends, you'll pick it up, and based on what you see, you can then identify the problem, or in this case here, which was quite a nice question, I think, you identified the best practice, good practices. For example, we spoke about Chad, the returns were low, etc. The rent was high, indicating a good area. The business opened for 7 days. So those are good practices. And clearly you can see that in that question, you didn't have to give advice because it was good practices that you were identifying. Whereas in the case of Andy's shop and Bob's shop, there were certain challenges, and therefore you had to identify the challenge and give the suitable advice to those two guys, Andy and Bob. Well, guys, the end of another show, and yes, we're slowly getting closer to our exams, so that's why our revision programs are intense. Please work through your exam papers, make sure you're au fait with the different types of questions, and definitely, if you continue in that vein, you will definitely be an accounting shining star. From myself and the crew, James and AB, until the next time, keep your feet on the ground and be good. Goodbye.